this would be something deeply interesting to me to hold and to roll, because over time, this is something that could double, triple, or quadruple in value. In the totality, I think what's happened, and I have to admit that I have been wrong the market up till now, feeling that the market was overpriced early on, and it even remains more so overpriced now. But what I didn't account for, and even the AI didn't account for, is the fact that all the money that is still sloshing around out there, that when the Fed started to signal that they may have a pause, the money sloshing around became very emboldened, and it invested back into the market. At this point, I think there's a move marginally higher that is coming because people feel that they've missed this rally, and now they feel I must get in now. That is not normally a good sign. That's normally a sign that you would fade as a contrarian. But at the end of the day, the market is up 14%, and it's been a good first half of the year. So now, given that I've been off on the year for approximately 10%, and that now we're going into the second half of the year, it's not like we would be looking to buy dips, or that the AI will suddenly change around, or an algorithm will pull us in or out of a new buy position. All we can say is that AI right now, given the fundamental data, still looks dismal. And perhaps, and this is my opinion, and I will opine this in this way, that the market is probably just delayed what I thought, and many people thought, would occur 2, 3, 4 months ago, till maybe 2, 3, 4 months hence. So we will see how that unfolds. If we look around the world and we were to take a quick look at the foreign exchange rates, I think we see something going on here too. Here's the US dollar. And the US dollar, as you can see, has come way off its highs, down to a 102 area. But I can tell you, in my career, when I saw this first trade in early 2000, this was also the price. The dollar is really in the same price today as it was 23 years ago. A little bit higher, a little bit lower. The dollar is not falling apart. Even though you may see some commercials this way, the dollar is not falling apart. It has fallen down from all-time highs to basically where it's been in a range for over 20 years. So let's make sure we don't try to downplay the dollar or its value, forgetting political thinking. Remove that from your mind and just think, hey, it's still in a range. So the dollar isn't giving us an indication that we should do one thing or another. And by the way, if that's the case, then we would see this to be true in the individual currencies. And lo and behold, it is. This is the, let's get the euro currency right over here. The euro currency, which of course made lows down to literally almost 95 cents, 90.95 of a euro buys you $1. Now, of course, the euro has rallied from this low back to 109. Most of my life, I remember the euro being more around 130. And you can kind of see it if we go back historically, that these were prices that occurred years and years ago. 10 years ago, the price was 135. I remember it as high is in the 140s areas many, many years ago. Here we go back here, back to almost about 12 years ago. So again, the dollar, at least against the euro, is much, much stronger. So the reason I point this out is because there's a lot of gold bugs out there. I'm not against gold in here, but if you're going to look at gold, you have to look at it in the context of the dollar. And what I'm seeing is not telling me that I have to go and run out and buy gold. Take a look at it. Gold hit its high of around 2080, kind of made another attempt to go to that high, and basically is falling off, as you can see, all the way through now. Let's go further up. Here's our little rally and fell off. There we go. So you can see gold is really having trouble at the $2,000 an ounce area. It's now about $1,900 an ounce. The question is, where does it go from here? I'm not a gold bug. I don't think owning some gold in a portfolio is a bad idea, but keep it no more than 3 or 4%. And don't buy gold just because you think the dollar is going to hell in a handbasket. I don't believe that for 1 second, but gold is only an investment for 2-3% of your portfolio, just like a cryptocurrency is. Let's take a quick look at something I find really deeply interesting, natural gas. I think everybody can admit these are the lowest prices for natural gas I can kind of remember in my lifetime. And when I see things like this, I'm generally trying to look to be a buyer. The question is, where? What's a good price to own this type of commodity if you feel that there will be a day in the future where natural gas might have its day? Maybe we will keep our gas stoves and gas ovens and allow our country to be able to use this natural resource the way it should be used, because right now it is literally at all-time lows. As an old commodity trader, this would be something deeply interesting to me to hold and to roll, because over time, this is something that could double, triple, or quadruple in value. The question is, how do you do that play? I'm looking into it and see if I can somehow put this kind of a product into our portfolios. So there's the general rundown of the worldwide markets.